What if I told you that billionaires and giant corporations often pay less tax than you do, and it's all perfectly legal? Imagine working hard, watching money vanish from your paycheck, while the wealthy glide through loopholes like secret tunnels in a video game. Some Fortune 500 companies even pay zero federal income tax. Zero. In this video, we're pulling back the curtain on 15 shocking tax loopholes that prove the system isn't broken, it's rigged. A loophole is basically a trick in the law, a gap that lets the rich skip paying their fair share. Think of taxes like Swiss cheese. The holes are where billionaires slip through. We'll break down each loophole in plain English with real examples and a punchline that shows just how unfair it all is. Outrageous? Yes. Entertaining? Absolutely. Let's dive in and see how the game is played. Welcome to Wealth Pal, a place where future exceptionally successful and wealthy individuals gain an unfair advantage. If you haven't yet, hit that subscribe button and turn on notifications so as to never miss out on a future life-changing video. Without further ado, here are 15 shocking tax loopholes that prove the system is rigged. Number 1. Carried interest. Here's the trick that hedge fund managers love. It's called the carried interest loophole. Sounds fancy, but here's what it really means. Instead of paying taxes like you and me, these money managers get to call their earnings investment gains. That label lets them pay a much lower tax rate, closer to what you'd pay on stocks, rather than a higher rate for regular income. Picture this. A teacher works all year, pays full income tax on their salary. Meanwhile, a hedge fund billionaire makes millions moving money around and pays a smaller percentage than the teacher. It's like the system saying, teaching kids? Full price. Shuffling paper? Discount. The punchline? This loophole has survived for years because powerful lobbyists fight to keep it alive. So yes, the people managing billions often pay less tax than the folks shaping the future in classrooms. Number 2. Offshore tax havens. Now let's talk about the classic hide-and-seek game of taxes, offshore tax havens. Imagine a company making billions in the US, but instead of paying taxes here, they send the profits on a little vacation to sunny places like the Cayman Islands or Bermuda. Why? Because those countries charge little to no tax at all. Here's how it works. The company sets up a mailbox office overseas, sometimes literally just a room with a desk. On paper, the profits belong there, even though the money was really made here. That way, they dodge US taxes while still enjoying US roads, schools, and workers. The punchline? Ordinary people can't just ship their paycheck to a tropical island. But corporations can, and they save billions while the rest of us pick up the tab. It's like the world's most expensive game of hide and seek, and they always win. Number 3. Double Irish with a Dutch sandwich. This one sounds like a weird lunch order, but it's actually a tax trick used by some of the biggest tech companies in the world. It's called the Double Irish with a Dutch sandwich. Here's how it works. A company routes its profits through Ireland, then the Netherlands, and back to Ireland, before finally parking the money in a tax haven like Bermuda. Why all the moving around? Each stop takes advantage of different tax laws, so by the time the money finishes its world tour, the company has paid almost nothing in taxes. Imagine selling billions of dollars worth of apps or ads in the US, but on paper, the profits magically live in a tiny island with no taxes. The punchline? Ordinary people can't mail their paycheck through 3 countries to shrink their tax bill. But corporations can, and they save billions while the rest of us foot the bill. Number 4. Step up in basis. Here's a loophole that makes inheritance a sweet deal for the wealthy. The step up in basis. Normally, when you sell an asset like stocks or property, you pay tax on the profit, the difference between what you bought it for and what you sold it for. But when someone dies and passes assets to their heirs, the value of those assets is stepped up to the current market price. That means if Grandpa bought land for $50,000 and it's worth $5 million today, his heirs inherit it as if they bought it for $5 million. If they sell right away, they owe almost no tax. The punchline? Generational wealth can grow tax-free, while everyday families pay full freight on their modest gains. It's like the tax code saying, "Congrats, you're rich. Here's a free pass." Number 5. Real estate depreciation deduction. Here's one that makes landlords and property moguls smile. The real estate depreciation deduction. In simple terms, the tax code lets property owners claim that their buildings are wearing out over time, even if the value of those buildings is actually going up. So every year, they deduct a chunk of the property's value as if it's crumbling, while still collecting rent and watching the market price soar. Imagine owning an apartment building worth millions. You get to tell the IRS, "Hey, my building is losing value," and then pocket a huge tax break. Meanwhile, tenants pay rising rents, and the property itself keeps appreciating. The punchline? It's like saying your shiny new car is falling apart while you're driving it off the lot and getting rewarded for it. Ordinary homeowners don't get this perk, but big landlords do, saving billions. Number 6. 1031 exchange. Here's a loophole that keeps real estate moguls smiling. The 1031 exchange, also called the like-kind exchange. Normally, when you sell a property for more than you paid, you owe taxes on the profit. But with this trick, if you take the money and buy another property, you don't pay taxes right away. You just keep rolling the gains forward, swapping one building for another, over and over. Imagine trading monopoly houses forever without ever settling up at the bank. That's basically what wealthy investors do. They can keep upgrading properties, deferring taxes for decades, sometimes until they die, at which point the step-up in basis loophole wipes the slate clean. The punchline? Everyday homeowners sell a house and pay taxes. Big investors? They swap properties like trading cards and skip the bill. It's a never-ending game of catch me if you can. Number 7. Corporate inversions. Here's a loophole that feels like a magic trick. Corporate inversions. Imagine a U.S. company that makes billions here, uses American workers, and sells to American customers. But when tax time comes, they suddenly claim to be foreign. How? By merging with or relocating their headquarters to a country with lower taxes, often just on paper. Picture this. A company still runs everything from the U.S., but legally it's now based in Ireland or Panama. That shift slashes their tax bill, even though nothing really changes. They still enjoy U.S. infrastructure, courts, and consumers, without paying their fair share to support them. The punchline? Ordinary people can't just move their mailbox overseas to dodge taxes. But corporations can, saving billions while the rest of us keep the lights on. It's like pretending to move out while still living in the same house. Number 8. Luxury business write-offs. Here's where the tax code starts to look like a shopping spree. Luxury business write-offs. Wealthy business owners can buy things like private jets, mansions, or even yachts, and then claim their business expenses. As long as they can argue that these luxuries are used for work, they get to deduct huge portions of the cost from their taxes. Picture this. A CEO flies to a meeting on a private jet, writes off the cost, and pays less tax. Meanwhile, you drive your car to work every day and get zero deductions. Some even write off home offices inside giant mansions, shrinking their tax bill while living in luxury. The punchline? Ordinary workers can't deduct their Netflix subscription or gas money. But the wealthy can turn luxury toys into tax breaks, making the system feel more like a playground for the rich. Number 9. Life insurance tax shelter. Here's a loophole that turns life insurance into a secret vault. The life insurance tax shelter. Normally, when you invest money and it grows, you pay taxes on the gains. But with certain life insurance policies, the money inside grows tax-free. Wealthy families pour millions into these policies, letting their fortunes balloon without the IRS touching a dime. Here's the kicker. When the policyholder dies, the payout goes to heirs without income tax. That means huge sums of wealth can pass from one generation to the next, shielded from the taxman. For everyday folks, life insurance is about covering funeral costs or protecting loved ones. For the rich, it's a golden vault that multiplies their money in secret. The punchline? It's like hiding treasure in plain sight. Ordinary people buy insurance for peace of mind, while billionaires use it to dodge taxes and grow dynasties. Number 10. Foreign earnings deferral. Here's a loophole that lets corporations play the waiting game. When U.S. companies make money overseas, they don't have to pay U.S. taxes on those profits right away. Instead, they can stash the cash abroad, sometimes for years, without the IRS touching it. Imagine a company earning billions from factories in Asia or sales in Europe. Instead of bringing the money home and paying taxes, they let it sit offshore, growing quietly. Meanwhile, everyday workers get taxed on their income the moment they earn it. No deferral, no delay. The punchline? Corporations can keep billions parked overseas, waiting for a tax holiday or a friendlier law to bring it back cheap. It's like pressing pause on their tax bill, while the rest of us pay ours in real time. Number 11. Sports team depreciation. Here's one that sounds almost cartoonish: sports team depreciation. When a billionaire buys a sports team, they don't just get the stadium, the jerseys, and the fans. They also get a tax break. The law lets owners treat player contracts as assets that lose value over time, just like machines wearing out in a factory. So imagine signing a superstar athlete for millions. Instead of just paying them, the owner can claim that the contract is depreciating and deduct that loss from their taxes. Even though the team might be raking in profits from ticket sales, TV deals, and merchandise, the tax bill shrinks thanks to this accounting trick. The punchline? Fans see their heroes as legends. Owners see them as tax write-offs. It's like treating human talent as furniture, profitable but somehow wearing out for tax purposes. Number 12. S corporation. Here's a loophole that small business owners, and some very wealthy ones, love to use: the S corporation loophole. Normally, when you're in a salary, you pay both income tax and payroll taxes, which fund things like Social Security and Medicare. But with an S corporation, owners can split their income into two buckets, part as salary and part as profits. Here's the trick: only the salary portion gets hit with payroll taxes. The profits part? That skips those taxes entirely. So a business owner can pay themselves a tiny salary, call the rest profits, and save thousands, sometimes millions, on taxes. The punchline? Regular workers can't tell their boss, "Hey, only tax half my paycheck." But S-Corp owners can, and it's perfectly legal. It's like having a secret switch that turns taxable income into tax-free magic. Number 13. Trust fund, grants, and dynasty trusts. Now we step into the world of trust funds, where the rich use clever tools like grants, grant or retained annuity trusts, and dynasty trusts to pass down wealth almost tax-free. Here's how it works. A billionaire puts assets, like stocks, into a trust. Over time, those assets grow in value. When the trust ends, the growth passes to heirs with little or no estate tax. A dynasty trust goes even further. It can last for generations, letting wealth flow down the family tree without being taxed each time it's inherited. Imagine a river of money that never dries up, flowing from great-grandpa to great-grandkids, untouched by the IRS. The punchline? Ordinary families pay taxes when they pass down even modest savings. But the ultra-rich can lock in dynasties of wealth, creating tax-free family empires that last for centuries. Number 14. Oil and gas depletion allowance. Here's a loophole that keeps energy giants swimming in profits: the oil and gas depletion allowance. The idea was simple at first. Let companies deduct the cost of pulling natural resources out of the ground, since those resources eventually run out. But here's the twist. Many oil and gas companies get to deduct way more than they ever actually spent. Imagine drilling a well, making billions in revenue, and then telling the IRS, "Hey, my oil is disappearing, so I deserve a tax break." Even though the company didn't pay for the oil, it was already in the ground. They still get to write off the loss. The punchline? Everyday people don't get to deduct the air they breathe or the water they drink. But fossil fuel companies can deduct resources they never bought, saving billions while the planet pays the real price. Number 15. Corporate stock buybacks. This is one that Wall Street loves. Instead of paying taxes on profits or raising worker wages, companies often use extra cash to buy back their own stock. This shrinks the number of shares in the market, which makes the remaining shares more valuable. Executives, who are often paid in stock, get richer, while the company avoids handing money to the IRS. Imagine a company making billions. Instead of paying fair taxes, they pump that money into buybacks, boosting their stock price and rewarding shareholders. Workers don't see higher pay, and taxpayers don't see extra revenue. The punchline? It's like a magic trick. Profits vanish from the tax radar, reappearing as soaring stock prices. Ordinary people pay taxes on every paycheck, while corporations turn tax bills into Wall Street jackpots. So there you have it, 15 shocking tax loopholes that prove the system isn't broken at all. It's working exactly as designed, tilted to benefit the wealthy, while ordinary taxpayers carry the load. From hedge fund managers paying less than teachers, to corporations pretending to live in tropical islands, to billionaires passing fortunes down tax-free. These aren't accidents. They're features of a rigged game. Now it's your turn. Which loophole blew your mind the most? Drop the number in the comments. I want to see what shocked you. And if you want more exposés that peel back the curtain on how money and power really work, hit like, subscribe, turn on notifications, and share this with someone who needs to see it. If you've ever wondered why the rich keep getting richer while the rest of us struggle, the answer is simple. They're playing by a different set of rules. And now, you've seen the playbook. Until next time, thanks for watching and see you in the next video.